In this video, I will show you 4 simple steps to help you start investing in the stock market. Now, if you're like most people, you probably have many questions about investing. Questions like, where do I start, or how much money do I need? Don't worry, I'm going to answer all those questions and more in this video. So sit back and relax because you'll know everything you need to start stock market investing by the time we are done here. Hey there, and if you're new, welcome to our channel, where we help you learn to see the income generating opportunities right in front of you. The first thing you need to do is to choose how you want to invest. When it comes to investing, you have several options. You can choose to invest in stocks, bonds, mutual funds, or ETFs. You can also choose to invest in index funds or actively managed funds. And you can even choose to invest in alternative investments, such as real estate, commodities, or even hedge funds. Of course, the best way to find the right investment is to match your knowledge and how much time and energy you have and want to invest. But let's be real, what are you looking to do with your money? Do you want to save for retirement? Do you want to build your wealth? Or do you want to preserve your capital? The first decision we need to make is how to manage your money. A human professional is a good choice for those who want to spend just a few minutes a year worrying about investing. After all, they have the time and expertise to track your investments and ensure they performed as hoped. A human professional can also provide guidance when making big decisions about your investment portfolio. For example, they can offer insights into when to buy or sell certain investments and how to allocate your assets to maximize your chances of success. In short, hiring a human professional is a wise decision if you want someone to take care of your investments for you. Robo-advisors have become increasingly popular as more people look for ways to manage their money without putting in the time and effort required to make an informed investment decision. Robo-advisors are solid do-it-for-me solutions with an automated program to manage your money using the same decision process as a human advisor. While there are some drawbacks to using a robo-advisor, such as the high fees charged by some providers, the overall advantages of using one outweigh the disadvantages. A do-it-yourself investment option is great for those with greater knowledge or who can devote time to investment decisions. With a do-it-yourself investment, investors can choose what to invest in and when to sell. In addition, an investor cannot lose more than what is invested in a do-it-yourself investment. A do-it-yourself investment is suitable for those who want more control over their investments and are willing to take on more risk. However, a do-it-yourself investment is not for everyone, and an investor should carefully consider whether a do-it-yourself investment is right for them before making any decisions. But right now, you can help a future business owner just like you find this video. Make sure to like and subscribe to help out. Their success just may be in your hands. Second, open an investment account. Next, you will need to open an investment account. You will need to decide if you want to use a traditional broker or if you want to manage investments on your own. Creating a stock portfolio and assisting with other aspects of wealth planning are two of the many services that a financial advisor may provide for their clients. The yearly fee is normally somewhere around 1% of your total assets, and the minimum commitment requirement is typically rather insignificant. If you are unclear about how to invest your money, or if you want someone else to handle your portfolio for you, it may be beneficial to seek the assistance of this kind of advisor. However, it is essential to keep in mind that you will be responsible for paying for this service. Hence, it's imperative that you select a financial advisor in whom you have faith and with whom you are at ease. Online brokers offer a convenient way to buy stock and other investments without paying additional research fees. This would probably be the best option if you want to manage your own investment strategy. With an online broker, you can easily buy and sell stocks and other investments without worrying about the extra costs. In addition, online brokers typically offer a wide range of tools and resources that can help you research your options and make the best investment decisions. As a result, an online broker is the way to go if you're looking for a convenient and cost-effective way to invest. Apps like Coinbase, Webull, and Robinhood fall under this category. Third, decide what to invest in. Deciding what to invest in can be a difficult task, but if you're using an advisor, you won't need to decide what to invest in. That's because the advisor will do that for you. All you need to do is provide some basic information about your financial goals and risk tolerance, and the advisor will recommend a portfolio of investments that are right for you. Of course, you can always choose to override the advisor's recommendations, but most people find it helpful to have someone else handle the investment selection process. That way, they can focus on other things, like living their dream life or building up their own business. Fourth, determine how much you can invest, then buy. How much should you invest? When it comes to investing, there are two primary factors to consider: how much you can afford to invest and how long you are willing to leave your money invested. Your willingness to take on risk is also a key factor, as higher risk investments tend to have higher potential rewards, but also higher potential of loss. With these factors in mind, you can develop a strategy for investing your money. For example, if you have a large sum of money that you don't have immediate access to, you may be willing to take on more risk in exchange for the chance of higher returns. On the other hand, if you can only afford to invest a small amount of money, you might want to focus on safer, low-risk investments. How much money do you need to start? Most online brokerages and robo-advisors don't have an account minimum, so you can get started with very little money. This is great news for anyone who doesn't have a lot of money to invest, but it's also good news for anyone who wants to keep their investments small. With most online brokerages, there's no need to worry about minimum balance requirements or high fees eating into your earnings. You can start small and grow your portfolio over time without worrying about meeting stringent account minimums. So if you're looking to start investing, don't let a lack of funds hold you back. How to manage your investments. When it comes to investing, it's important to keep an eye on your portfolio. By monitoring your portfolio, you can make sure that your investments are performing well and that you're on track to reach your financial goals. Additionally, watching your portfolio can help you spot opportunities to buy or sell securities. Of course, you don't need to obsess over your investments every day, but it's a good idea to check in on your portfolio regularly, especially if there has been any significant market changes. Doing so will help keep your finger on the market's pulse and make informed decisions about your investments. Of course, this is an easier task to do when investing with an established broker or robo-advisor that provides frequent updates on your portfolio. Here are some tips for beginning investors. Tip number 1. Don't be afraid to start small. As mentioned earlier, most online brokerages don't have an account minimum, so you can get started with very little money. This makes investing accessible to everyone regardless of their budget. So if you're just starting, don't be afraid to start small. You can always add more money to your account later on, as your budget allows. Tip number 2. Automate your investments. One of the best ways to start investing is to set up automatic investments. With most online brokerages, you can set up regular transfers from your bank account to your investment account. This makes it easy to invest without having to think about it. Additionally, automated investments can help you build up your investment portfolio slowly and steadily, without making a large lump sum investment all at once. Tip number 3. Stay diversified. When it comes to investing, there is no one-size-fits-all approach. Depending on your goals and risk tolerance, you may choose to invest in a variety of different asset classes. For example, if you're looking to maximize your returns, you might invest primarily in stocks. However, if you're more concerned about preserving your capital, you might allocate a larger portion of your portfolio to bonds and cash. Ultimately, the key is to find the right mix of investments for you. By diversifying your portfolio, you can minimize your risk and give yourself the best chance of achieving your financial goals. Remember that this is not financial advice at the end of the day and is for informational and educational purposes only. You should consult with your financial advisor to get tailored advice for your unique situation. Make sure you've hit the subscribe button and turn the notifications on so you don't miss out on how to make $100,000 on Fiverr.